Good afternoon, everyone. Thank you, event organizer, for this opportunity. So I think this session should be interesting, and the reason is because we heard so many finance leaders, a lot of good perspective in terms of finance technology. And now we will share some thoughts, especially on tax and regulation, how things have evolved in the last few years, we all know in this region, and why tax and regulatory compliance now become, I would say, most critical. So just briefly, we will first give our introduction, so that sets the context, who we are and what perspective we'll bring, and then we'll jump to the discussion. So I am Manish. I am heading the group tax function with AW Rostamani in the region now for 21 plus years. AW Rostamani is one of the largest family conglomerate, one of the oldest family business in the region. So I am here for almost now 3 years. Before that, I was 10 years with Majid Al Futtaim, again, one of the largest family-owned conglomerate in the region. And first 10 years of my career, I was with large US multinational into oil and gas. So all 21 plus year career in leading the tax function across the world. Joao, please.
So it's a pleasure to be with all of you here. I have around 17 years of experience in an international career. I've overseen operations in plus 30 jurisdictions in 4 different continents. I've been through the beginning of my career, a big 4 consultancy firms and other consultancy firms. And the last decade, I've migrated to an in-house role in leadership roles in multinationals, and now I'm with Dutco Group. It's one of the also largest groups, multifamily conglomerate, headquartered in the UAE.
Good afternoon, everyone. My name is Preeti Amvani. I work for NMDC Group. I have about 2 decades of consulting experience and total tax experience, out of which about 15 plus years have been with Big Fours and 5 years in-house role. I've worked in multiple jurisdictions in India, US, Netherlands, and now in the region, UAE, for about 10 years. As far as the group is concerned, NMDC Group was started in 76, so it's quite an old group. We are listed on the Abu Dhabi Stock Exchange, and in terms of the revenue, it's somewhere around 26 billion. I think the group, brand-wise, is perhaps more popular in the dredging and EPC kind of sector, and we're amongst the top 5 companies in the dredging world. So I'm glad here to join you guys today. Thank you.
Great, thank you both. So I think the discussion of our panel is finance readiness, or say finance strategy for compliance at scale. And when we say compliance at scale, so as I was just touching upon, we saw this region and globally also, it has changed significantly in terms of regulatory and tax compliance from 2016-17. So it started with excise tax, then VAT came. In between, a lot of global reporting, country by country reporting, AML, now with the corporate tax, transfer pricing, and going forward, Pillar 2 and global minimum tax. So these few years have been extremely, I would say, demanding for tax professional, and of course, if something comes to tax, they rely on data, and it goes to the finance team. So I think we have seen a big transformation, and journey still continues. So I think what we will try to do with this panel discussion is to help you to know, say, some of the perspective, how we as a tax leader managing this tax and regulatory compliance in our organization, and how we can be a good partner with the finance team, and not to work in silos, but really blend with finance team, and as a tax organization, as a tax function, we also try to add value to the organization. So to get this discussion further, my first question to you is to you, Joao. So as we know, the global tax reform, Pillar 2, CBCR, tax transparency requirement especially, completely reshaping the large and multinational organization in terms of data sharing, tax transparency. So how do you see companies are managing this, and how they can use those also as an opportunity to strategize the planning, tax planning and optimization?
Yeah, that's a great question. And I think Pillar 2 and also all this trend of tax transparency are really reshaping our tax framework. It's a very big shift in the global tax policy, right? The Pillar 2, basically, what it's essentially doing is leveling the playing field, right? We used to have a race to the bottom, whereby countries would reduce the corporate tax rates, provide beneficial tax regimes, somehow make the taxpayers' bottom line more attractive, right? That is all with the intention of attracting more investments. And on the long run, it sounds good, but on the long run, you see that the corporate tax rates across the globe go very low, and some would say would even create unfair competition among the countries, right? So what the Pillar 2 now is doing is they arrived at a common sense sort of tax rate that they are comfortable with having as a minimum effective tax rate, and now they're leveling the playing field. The countries don't let's say, use the tax as a tool to attract investment, not as they were using before. And what does that represent to us? I think we now, especially multinationals, obviously, that are subject to Pillar 2, big multinationals, you need to look at the structure, right? Understand if you have companies in low tax jurisdictions, understand the types of beneficial tax regimes you might have. If you can use some R&D credits, maybe you still stand a chance to benefit from the Pillar 2 within the context of the Pillar 2. So you need to look at your entire corporate structure and make sure that it makes sense in light of this new minimum tax requirements. And when it comes to transparency, well, we all been seeing big tax scandals, right, in the past years. This has driven the tax transparency agenda, and now we have to balance more interest, right? There are more interest in the play here. It's not only your shareholders' interest, which is maximum profit, right? Now you have the interest of your external stakeholders. You have to do what is also morally acceptable, ethically acceptable, not only using legality, what strictly what is legal to maximize profit. So now you have to do this balancing of interests, and I think this changes a lot the tax framework for all the tax professionals. And in the end of the day, you need to converge your compliance with your tax strategy, right? Your tax planning. Your tax planning, you have to know that your tax planning will reflect and be available to the public, and needs to be strong enough to withstand criticism or scrutiny, not only from tax authorities, but also from the public, right? So that's I think, how they're reshaping the tax framework.
Very well said, Joe. And as majority of them, you are from finance field, group CFOs, I think you know very well that Pillar 2 global minimum tax is now reality in the UAE, and I would say overall in the GCC. UAE, it is announced, tax returns are due, tax professionals are working. So I think, and tax transparency, we know tax authorities are now collecting data from multiple sources. Tax authorities across the world have signed a lot of tax sharing agreement. So transparency has become very important. It is not only paying correct amount of taxes, but correctly reflecting those taxes in making sure tax authorities are also convinced. I think this is the way forward. So in this connection, my next question to you, Preeti. So when we see that there are so many regulatory and tax requirements, so whether it is VAT, transfer pricing, corporate tax, several regulatory reporting, how do you see this requires or impacting more coordination between finance and tax? Because in the past we have seen 7-8 years before, majority of the companies did not have tax department. Multinational and big companies had tax department, but tax department used to work in silo, very less coordination and less, I would say, contact between finance and other stakeholder. But now it is not possible. So how do you see this in your organization, and what is your advice to audience in this respect?
Thank you, Manish. That's a great question. So I think in terms of finance and tax, there is need for integration now more than ever before. In the past, like what Manish was mentioning, that there were times when different sort of finance and tax departments were working in silos, doing their own thing, where finance would come up with the financial statements and tax would come in at a later stage when the reporting has to be done. But now I think things are changing very much. What is really happening is with e-invoicing, Pillar 2, some of the other requirements which are coming in, there is need more and more for the finance teams to work together with the tax team. I'll give you an example in our own company now. We are a public listed company, and every quarter we have to release financials to the market. So, in terms of the tax provisioning, we don't wait until the year end. We have to do on a quarterly basis, whether this is for, Pillar 2 or the normal tax of 9%. So in that sense, there's a lot more collaboration which is required from finance together with the tax team. Another example recently, let me share with you, which we have worked on. Now, very common thing is that you have these shared services, right? Now, in the past, it was more like, okay, the finance would do an allocation to the various subsidiaries, whether it is in the form of, let's say, management charges, or it is in the form of, recharges. In that sense, the allocation mechanism now needs to be agreed, let's say, something that also aligns well with the transfer pricing. For example, if you have shareholder-related cost, or like we did an IPO for one of our business units last year, now can we charge those IPO-related costs, or would you say, no, these are our shareholder costs, and these should be sitting at the level of holding company? What you can charge is, for example, if you have shared services related to IT, finance, legal, HR, these kind of services. Now, the next question is, do you charge it just based on the cost, or would you include a markup? If there is a markup, how much should that be markup? Should you then look at the safe harbor rules, which are now provided in the transfer pricing guidelines, or would you then go with a benchmarking study, which would be a separate analysis in itself? So there are many questions that come up, and for this particular exercise, we were like, okay, let's brainstorm, let's understand. Something that works from tax has to also work from business, and vice versa. So there has to be a constant involvement of tax already at a much earlier stage. So in that sense, tax is not only, let's say, backward-looking anymore, it's more forward-looking, where it is a part of your overall strategy, and then, that you work together with the teams. So the key question then is, especially for this audience here, that most of you are CFOs, and what does it mean for you? Now that the landscape is changing so much. I would just say there are two things. One is obviously that it is very important to involve tax at a much earlier stage. Let's say if you have big projects, like we go for EPC projects, already the planning starts at, let's say now we are planning for a project that will start somewhere in 26 or 27. We already start looking at, okay, what are the different types of taxes that will impact the project, withholding tax, VAT, corporate tax, some of the other taxes in various different countries that we work on. So already at the strategic level, you involve taxation at the planning part of the project. This is one. The other one would be from a CFO perspective, very important, that how you have your KPIs, okay, how my numbers look like, how much is my profitability. The same way, I think we need to start looking at what is my effective tax rate? What is my, tax cash outflow for every quarter? And also, what is my deferred tax? Some of these elements from a tax side should actually be a part of the CFO dashboards, and these should be important elements to be considered from a strategy perspective.
Very well said. So, and I think to add perspective, as Preeti has rightly said, it is very important for organization to involve tax from the first stage. Still in many companies, we see that, okay, a lot of new projects, a lot of new due diligences are being done, and management says that, okay, we'll involve tax at right time. And that right time comes at the last, when everything is already decided, especially legal entity structure, all are decided. And then tax brought into the picture, and then all damage control tax needs to be done, which majority of the time is very costly affair. So I think it is very important to involve tax into every decision making from the first stage. Luckily, I would give an example in my company that we have brought so much of awareness that tax department is part of every single committee which makes the decision making. And that really helps, because now UAE and in this region, it's not only one kind of tax applicable. There are direct, indirects, all kind of taxes applicable, and every transaction will have impact of various kind of taxes. So if tax department is involved at right time, I think the contribution which they can make can be really significant, and it can many times help to optimize taxes also, because if involved at right time and in the structuring is done at right level at right time, it can definitely improve your effective tax rate. So next question to you, Joao. So again, as we have seen so many different taxes applicable, and of course, every tax is impacting the ultimate takeaway of the owners. So how companies should really balance this addition of taxes, levy of different compliance cost, and of course, to do all compliances, there is cost involved, whether it is resources, technology, but at the same time, growth agenda is also important. So what is your advice to corporates that how do they balance compliance as well as then focusing on the growth and expansion?
Yeah, we as tax professionals, we know that doing tax sometimes looks like spinning plates, right, with sticks. There's a lot of plates that we need to keep spinning, and we cannot let them drop, right? And compliance and the growth agenda, they represent some of those plates. I think to tackle this, it's a very challenging framework that we work on, but we need to have, I think, 3 key things in our mind. One is to have the right people and skills, right? To have the right technology in place and the right governance and processes, right? When it comes to the people, we cannot have all the people with one skill set only. One person cannot be specialized in everything, right? So we need, I think, a diversified team whereby you have someone who is more tax savvy, right? Focusing on compliance, someone who understands the intricacies of the tax reporting in the countries, someone who can read numbers and tell a story with the numbers they're seeing in the compliance we're submitting. And on the other hand, when it comes to tax planning and the growth agenda, right, you need someone who has expertise, for example, in M&As, doing tax due diligences. Someone who is more business-driven, who will be side by side with the business to understand deeply the business strategy and provide real solutions, good solutions that are aligned with the business strategy. Because I've seen in my career, throughout my career, professionals that are very good technically speaking in the tax field, but they would provide tax solutions or suggestions, make suggestions that wouldn't be aligned with the business strategies. And that just doesn't work, right? We need always to be very well aligned. And well, with the technology piece, we all know we need to go down this path. I mean, we need to invest in technology. This technology is an enabler, right? If we have the right ERPs, the right tax engines, you will have even more time to really add value. You don't waste time in repetitive tasks. You can actually focus on driving value to the business. This is key. And last but not least, the governance and processes. The governance can really work on two sides. One, on the growth agenda, whereby you have the right people taking the right decisions, so you understand where exactly the tax should be involved, right? When they should be involved, in which discussions we should be involved. This is all part of governance, right? And to which level of the decision making the tax manager can take decisions, or even the board must take decisions when it comes to matters that involve tax impact. On the other hand, for processes, I think governance, it is a pyramid, right? On the top, you have the board level, the CFO, the tax head of tax taking the decisions on which tax strategy we're going to follow. And in the middle, you have the tax managers who will understand the tax strategy and create tax policies and processes that will reflect this tax strategy. And at the bottom, you have the analysts, accountants, really making sure that it's rightly executed.
And just to add some perspective to what Joao has mentioned, see, growth and expansion will be always priority. But at the same time, I think management, finance function, group CFO needs to accept this fact that this region is no more a tax-free region. Long time it was tax-free, and shareholders or owners always got their return without taxes. But I think this is not an option anymore. Still, if we see effective tax rate in the region are very competitive if we compare the West. So I think that is still a blessing. And I think you may have heard many times in the past also, but there is a say which says that, okay, if you feel that compliance is expensive, try non-compliance, which really shows that if finance and owners has not given preference to tax department, and if there is any non-compliance, I think the penal implication and the cost can be multiple times. So again, I think expansion and growth is always on the agenda, and tax department always supports that. But at the same time, managing that balance and compliances on timely and accurately, I think it is very important. Now let's, if we quickly move to say technology part, Preeti. So we know that there are a lot of tax tools and technology has been made available globally in last few years. So how do you see future of compliance and regulatory and tax department? We will still, and again this question can come from CFOs and finance side, that what is correct structure of tax department? Do they really need full-fledged tax department, or this technology or artificial intelligence can say replace the tax professionals?
That's a very interesting question. Thank you, Manish.
And I am asking this question on behalf of group CFOs.
Yeah, absolutely. You know, when we were in the 80s, my mom used to work in a bank. And at that time, the computers were introduced. And the same question at that time came up, and a lot of people were worried that their jobs will be gone because the computers are now going to take over. I think we are now in a very similar situation, that everyone's talking about AI and digitization and things that will maybe replace our manual work with the AI taking over. I was reading, or actually listening to a podcast about AI, and something very interesting that I actually listened to. It said, yes, it definitely will require upskilling, and jobs, the nature of the jobs that we have now is going to change drastically in the next 5 to 10 years. But there are two skills that will always stay, where technology cannot really overtake humans at all. And what are those two key skills? The first one is strategy. Machines can do the compliance work, yes, but when it comes to thinking, the number, actually analyzing the numbers and taking it to the board of directors, that part can never be done by AI. I think this is where the CFOs can utilize the digitization part of it and really use it for their advantage. It speeds up everything, it makes us more efficient, yet it does not discard the use of the benefits of the machine itself. This was one. The other one that they talked about on that podcast was that the relationships. Now again, we sometimes as technology people, we focus a lot on the technical part of things, the law, the interpretation, the compliance and reporting part of it. But this one thing that the podcast mentioned, and it kind of stayed with me, was that relationships that we build, this is something that technology cannot take. So I think it's really what we need to do is that, personally, I feel that digitization is excellent, like the compliance part of taxation, where you have the reporting to be done, you have the annual filings to be done. This part definitely the technology can do, and we should actually enable technology to do. Whereas the interpretation and analysis part, we should just leave it, and at the same time invest a lot in our relationships, how we can kind of amalgamate the three things to bring the best out of our finance teams.
And also to add here, I think as you rightly said, that tax still does a lot of interpretation, many times a lot of negotiation with stakeholder, and also during tax assessment with tax authorities. I think that part is very difficult to automate, and I think at least till our lifetime, I think tools are not that sophisticated, so I think at least we are safe. We don't know what is going to come next. Now, similar, one more question I would like to ask Preeti, that, okay, everybody within finance and tax are talking about tax technology, tax digitization, but we know very well and we need to accept this fact that this region in terms of systems and all is not that matured as we compare to other regions. We still have tendency, or at least tendency, which has built multiple system in every organization. So new expansion, new system. New structure created with new system. So still, and again, I can take example of my company also, we have multiple underlying system. Data quality is very poor, everybody will accept this because nobody has really taken seriously while system implementation or data quality, because there was not much regulatory and tax requirement. But now suddenly, because all the requirement came, this is becoming a big challenge in terms of any new tax technology implementation or data quality, because of course it's garbage in, garbage out, as earlier speakers also said. So do you really see, when we talk about so big name or artificial intelligence or data or technology, are we really ready for this implementation, or it is just still fancy word?
Thank you for that question. Again, a very, very interesting question. And again, since morning, I guess you've probably heard a lot about AI and digitization. But the ground reality is actually quite different. From my perspective, I think, based on my experience, I've seen two different extremes. One where you would say that, yeah, companies are still struggling to actually reconcile their, let's say their VAT returns with what goes in your financial statements, which is really the starting point. If FTA comes for an audit, they will first do this reconciliation. So on one side, there's still a lot of Excel sheets being used and number crunching, and the data authenticity, the accuracy of our data can still be a question. On the other side, I have also seen companies who have invested heavily on technology, and there are these fancy tools which have been approved and have been implemented. But at the end of the day, they are still looking at an Excel sheet and kind of checking, making sure that what the technology is producing is indeed in line with what they would do in Excel. So I think these two extremes kind of, what we see in the region. Having said that, what is really required at this point from the CFOs, and how we can really add value to what the organization can do, I think that's very important. And in my view, I think the CFOs need to have a clear strategy in terms of digitization. For the ones where they're still kind of working on reconciliation, there is a need to just kind of take maybe smaller steps and have a strategy for digitization in a more phased manner. Okay, look at e-invoicing. We know it's going to come in 2026 onwards, and then again it's going to be in a step-by-step way. Should we then start preparing ourselves for that? Or should we look at, let's say, regulatory tools where you can have alignment between what your transfer pricing results are coming and then what your corporate tax filings are? So things like that. Every company would be different. Every industry would be different. So specific for your current situation and your company, what is that best strategy? I think that plan should be prepared already for the next 1 or 2 years, short term, long term, everything should be, I think, created.
Correct, and I think my personal advice based on previous experiences, always go ahead with the technology which is really fit to the organization. Just because something is very popular in the market, a lot of companies start those automation projects, and believe me, so much of effort, cost is being invested, and then eventually majority of the people, or actually people who are supposed to use that tool, they don't use that tool, they still continue with the old practice, and imagine how much is the loss of efforts. So I think what is suitable to an organization is very important. Just to quickly take your feedback, Joao, how do you see technologies globally as compared to region are basically implemented, and also share some view if you know how tax authorities are advancing into automation? Because as I said that, okay, companies exist in the region for a long time, so their system, processes where data was not set up considering tax into perspective, but for example, UAE FTA is 7-8 year old authority, and they don't have that problem. And they are, as far as I understand, are in a much advanced stage with a proper manner for automation. And that can possess a big challenge for companies because they cannot match with FTA's standard. So do you want to share any perspective?
Sure. Well, if you consider when the first tax was introduced in the world, 1799, to fund the Napoleonic War. So imagine, we're just starting a journey here, right? But I see that the region is really, catching up very quickly in terms of technology, and you see tax authorities across the globe, and that. To answer your question, I think the best way to understand is who is driving it, right? In my opinion, the biggest push for automation and technology is coming from the tax authorities themselves, right? Because they are investing in technology. They are investing, we see e-invoicing widely implemented in the world and advancing, e-reporting. We see tax authorities investing in AI, in machine learning, in advanced analytics, so they can, in a fraction of seconds sometimes, find inconsistencies on your compliance, right? They can catch fraud using such tools. And imagine if they have all this and then they poke you and they start asking questions, and then you open your Excel file with hard-coded numbers and you try to find out where you took this information from. It's like going to war with sticks, right? You don't have the tools to sort of be upfront and keep up with the demands of this new era, right? So I think that's one aspect of it. And the other aspect of where we're going with e-invoicing that I just mentioned here, it's migrating from reactive compliance, meaning after the fact compliance or submissions and filings, to a more real-time and live compliance, right? So this migration, it's a big shift, I would say, even in the mindset of tax professionals. You need to now be focused on your technology. You have to think ahead of time on your tax policy and think that it will be automatically reflected once you start introducing on your transactions and you share automatically with tax authorities. So you have to, in advance, make sure that all the systems, everything is set up in a proper way. Otherwise, you might not even be compliant. I think those are the biggest shifts, I would say, and the way we're going when it comes to technology. And a mindset shift is also needed for us.
Very true, and I think, as Joao rightly said, that many tax authorities are already in very advanced stage of implementation of technology, and that is clearly getting reflected in the assessments or inquiry what we get nowadays from tax authorities. Those days are gone when they are asking a lot of information and document just for the sake of asking. Nowadays, the queries from tax authorities are, I would say, selective, but there are quality queries, and really they focus on the areas where they know that if companies don't have processes, don't have technology, they are going to get errors, and then of course extra payment. So next question to you, Preeti, and I think one of the theme of event was RegTech. So I think majority of finance professional might know what is RegTech, but RegTech is basically a regulatory technology. This, I think, theme emerged from the 2008 financial crisis, and during that time, as we know that especially financial institution, banks got this discovery of lot of, I would say, irregularity because compliance was lacking. And then this RegTech was actually formed officially in 2017. And now it is a very common phenomena, especially in the financial industry, banking industry, and it is getting very fast popularized across the world, even in corporates. So how do you see regulatory technology, RegTech, can help organization? Because now not only banks and financial institutions are liable to do various reportings, whether it is compliance, fraud, risk. Even a lot of corporates and many countries also have brought those laws. So how do you see RegTech can help organization? What is your advice that how companies should select RegTech companies or RegTech technology for their compliance? Also, just to bring in perspective, if I remember correctly, during 2024, globally, financial institutions and banks have paid close to $19.3 billion of penalty just for irregularity in various compliances. And that will definitely impact corporates. So any thoughts you would like to share?
Yeah. So I think RegTech/automation, these are really the need of the hour. Again, in this region, if you see, there are so many changes happening. Joao mentioned about proactive or real-time reporting as compared to being more reactive. I think the way this landscape is changing, it's almost impossible to do things manually. I'll give you a couple of examples. Pillar 2, for example. There are about 300 different data points that need to be put together to get the data which is needed. Now, for a company like ours, we are a subgroup under IHC, and IHC has about 1,200 plus subsidiaries. So manually, it's impossible for them to, prepare Pillar 2 return for that matter. Even for mid-sized companies, there's only so much that you can do manually. You rather invest your, let's say, from a finance side into technology that enables you to free up time from compliance so that the focus can be more towards the strategic side or the decision-making side, new projects where you really are required. Another example would be transfer pricing. So for multinational companies, let's say some of the companies have subsidiaries or branches in 20, 30 different countries, right? Now we have TP regulations here in UAE. What that also means is that you need to do your year-end true-up calculation. Now when you do that, then when you impact one country, then also it impacts the other country. So how do you then manage it manually? the good thing about RegTech is you put in all your data, and then you can do your simulations, you can do your analysis online, you can have your various dashboards, and you can really analyze how I can get to a really lowest effective tax rate and yet sort of optimize my tax savings as well. So I think that way regulatory tech is really the way forward, I would say.
And I think majority of you may already know, but there is, I would say, very clear distinction between RegTech, digital technology tools available, and then of course finance technology or finance transformation. So there are, I think, around 1,000 companies which as of now supplies RegTech technology. It is, I would say, more commonly known phenomena in US and in Europe, but again, this is coming very soon in the Middle East region. And I think this is really the future where RegTech will handle all regulatory compliances online. And good part is all those providers have their database linked to and updated to various countries' requirement. So then companies don't need to follow the regulatory update. Once you install that technology keeps getting updated and your compliances gets corrected. Before we come to our last final question, I just want to quickly touch base on the e-invoicing. I think e-invoicing is a big project which is already initiated by FTA. It's going live next year. And I think majority of the companies are still not in that journey to start and implement. It is, I would say, a very big implementation similar to any tax implementation. So I think immediate need is to start the gap assessment, see where are your systems, because next year from 1st July, if your systems are not ready for e-invoicing, business continuity may get impacted. So Joao, anything you want to share with finance team? Because again, it is very clear, it is not a tax project, it is finance driven project and require involvement of group IT, legal team, tax of course will be a main stakeholder. But anything you would like to share? Because I think it is very important to highlight e-invoicing's importance to group CFO and finance community here.
Definitely, it's something that is a hot topic in our agenda, right? As you rightly said, it's a multidisciplinary project, right? You need the IT, the finance teams, and even the business as well to be involved in this project together with us, the tax leaders. I think one of the key things is for you to have a deep look at your processes and see and understand the entire journey from the PO until the delivery of the information to the tax authorities, to see if you're really the information that you're feeding in your e-invoicing, right, in the format, in the fields you need to fill out, they really make sense, right? I think understanding your processes, and we, in my case, for example, in a big conglomerate, different teams, different businesses, completely different challenges. We need to have a deep look into these processes and have the right partners with you, right? We know we have a few big fours. They're also providing support on analyzing your processes. You have the ASPs that will validate the invoice and also share with the tax authorities. You know, it's a bit different of a project when compared to KSA, because there the tax authorities, they validate for you, right? Here in the UAE, the responsibility is shifted to us. As the taxpayers, you have to validate it first, and then you share with the tax authorities. So it's key to have, you know, the right partners with you on this journey. And again, the window is a bit tight. We know that there's a few final regulatory or regiments to be enacted, and we're all anxiously waiting for it, so we can actually go live and kick off the introduction of such rules. And I think we will have time, but we should be prepared ahead of time once these regulations are enacted.
Preeti, anything quickly on the e-invoicing? How do you see this in your organization or any advice?
Yeah, no, I think e-invoicing is really required at this point of time, and the sooner the organizations can start preparing, the better it is. In my view, I think you do need about 6 to 9 months to get ready for it, and it will require your AR, AP teams to work together with your tax team and technology teams. So the sooner you start, the better it is, and I tell that to my own team as well, internally. So I think it's really something that everyone needs to focus on now.
And I think what I see, many large organizations and even mid to large organizations have not yet started, which is really a concern, and majority of the group CFOs or say management team are giving excuse that, okay, law has not issued the list of, when Joe was saying partners list of the system technology provided, which is called the accredited service provider list, is not issued. So, okay, once they issue, we'll start, but we need to all keep in mind that due date of going e-invoicing live is July 26. That is a very firm date. And the burden of implementation is on the companies. Tax authority, maybe 15 days later, 20 days later, 1 month later, they will issue the law. And clock is already ticking. So I think, and again, e-invoicing in the UAE, in the region, will not be different than world. The concept is same. So I think the whole knowledge base is very readily available from neighboring countries, Saudi, from worldwide. So I think all group CFOs should really take this project very seriously, and I would say start immediately, because as Preeti said, window is very short. And especially for large companies, companies which have multiple systems, imagine the kind of challenge, integration, data cleansing will require. So just...
yeah, and just to add to that, that now the budgeting period is starting for most of you, so I think it's a good time to secure also budget for e-invoicing. This is definitely our recommendation.
It will require substantial budget. Yeah. Just so before we conclude, very quickly in 30 seconds from both of you, as we discussed so much about various taxes, automation, how tax authorities are ahead the curve in terms of systems, quality of data. So how do you see, with all taxes interconnecting to each other, and tax authority will definitely want that every data point gets reconciled. How do you see tax assessments coming in near future? And very quickly advise how companies should prepare for that.
Well, I think for that, we already have some tools in place. I mean, the market offers some tools that can really act as a one source of the truth, right, for everything. I think, as you rightly mentioned, we're more and more connected, and it's really difficult to implement that without the right tools in place, right? You need to have a system and processes that allow you to always come back to one source of information that will feed all your tax obligations, because we have the most varied tax obligations. So audit trail is key. You need to have the proper references and be able to go back to your trial balance, to the detail of where your information comes from. I think it's key to attend any tax audit.
Preeti, quickly from your side.
Yeah, I will just say 3 words. One is data accuracy. Second is digitization, which is RegTech. And the third one is maintain audit trails.
And again, just to add on this, as Joao has said, one source. So I think, considering so many taxes applicable, I think there are many tools available which provides all automation as one tool provider, whether it is VAT, CIT, customs, legal. So I think companies can really look for those kind of tool. And also, in the past, we have seen in this country, in several countries, within tax authorities, there were multiple sub-tax authorities. So one tax authority for VAT, one for customs, and those were also operating in silo. So on that time, even if your returns for different category of taxes has some issues or differences, it was possible or acceptable also, because those tax authorities were not talking to each other. But now even if we see in UAE, everything is consolidated at one tax authority with artificial intelligence. So they just need to run some buttons or some clicks, and they will get the full reconciliation at their end and which are the discrepancies for companies. So I think it is high time to use technology with right processes. Thank you, everyone. So I can take this. So very good question. I thought before withholding somebody will ask about personal tax, but
That also is there.
so I will answer both to the best of my ability. So I think withholding tax, again, correct me guys, but I think law clearly provides provision for withholding tax. As of now, they kept rate as 0 or not applicable, but there are provision and the structure is already part of UAE corporate tax. So I think as of now, I don't see it is coming in near future because definitely tax authorities said that they want to keep it business friendly. But I would say down the line in few years, withholding tax will definitely come because withholding tax in any country is a fundamental part of the corporate tax. So I would say corporate tax is incomplete without withholding tax mechanism.
Yeah, I agree. And just adding here, I think the UAE implemented corporate tax also to implement the best practices and etc. It got out of a blacklist or gray list from Europe and everything. So, but they did it, but also with intention to continue to be attractive, right? So you can see it's one of the lowest corporate tax rates in the world. The withholding tax is 0, as you rightly mentioned, but to the extent the government needs to do any change, it's just change the number from 0 to whatever they want. So, yeah.
For me, I think you guys covered pretty much everything on withholding tax. From my side, I'm happy as long as they don't bring the personal income tax. Yeah.
And I think to comment on personal tax, as I said, I am here for 21 years and at least before I get retired, I am also praying like you, it should not come.
Related to withholding tax, I have one more question. We are also doing some service invoices too within GCC. Okay, in some of the GCC, they have withholding tax 5%. And on our invoice, they are deducting and they are paying us. So it is going to be our loss. So how we can treat this one? How I can take back this 5%? Whatever they are deducting.
So I'll give you an example. If you have transactions with Saudi,
yep.
Okay, you have 5% withholding tax, right? Now that we have corporate tax in the UAE, there are two things you can do. One is this double tax treaty that you have between Saudi and UAE. You can get reduced rates on this withholding tax based on the treaty, which essentially would mean, again, depending on your business and what kind of transaction we are talking about, you can reduce that rate from 5% to 0%. This is one way. The other one would be that in UAE, because you're filing your corporate tax, at the end of the calculation, if you see, you can get foreign tax credit, which means a big part of your withholding tax. Now, again, depending on how much tax you are paying on the same income in UAE. So let's say if I have technical services being provided from UAE to Saudi, I get a withholding tax of 5%. The question would be how much of this 9% corporate tax I am paying on that particular income. So your foreign tax credit then is limited to the amount of maximum how much local corporate tax you're paying. So you will still partly be able to get that reduction.
So it is irrespective of Saudi or Qatar. In two countries, they are charging 5%.
Yeah, I mean, if you see around the world, there are many other countries charging as well.
Within our
yeah, in the region, yes, that's right.
So yeah, in summary, what she said that, okay, within GCC, if you are getting withholding from 2 countries, if you have proper documentation and if on that income you are paying taxes in the UAE, you can get deduction of that taxes, so it will not become your double cost.
Yeah.
Yeah. Thank you.
Thank you. Thanks. Thank you.
Thank you for the wonderful insights. My question is that by any chance the government is contemplating to implement a minimum tax on the turnovers on quarterly basis that can be adjusted at the end of the year against the final tax liability, which is called, I think, probably presumptive taxes. Is there anything like that? Have you heard?
As far as I understand, I have not heard anything, because suppose if this was supposed to come, this would have come before corporate tax to say cover some category of companies. But now, as we have the proper corporate tax jurisdiction, I never heard, or I don't think so this will come. No.
Yeah, I haven't heard either. I mean, you have some benefits. You have the small business relief. You have other types of benefits or incentives introduced here, the free zones and so on. But this one, I never heard.
All right. Thanks a lot, everyone. Thank you. Thank you.
Thank you, everyone.